Good morning, folks. Happy hump day. Mike, 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 Mike. You see that old commercial? Geico. Hump day. All right, so hope you're all doing well. I'm a little lethargic today. You ever had those lazy days you just don't want to get out of bed? The weather's starting to change here. It's getting cooler. I love it. So we are looking at if everything is copacetic. We should be seeing a 15-minute time frame of the Bitcoin, and we're all in long. Bitcoin is ready to moon today. And, oops, I'm sorry. I'm looking at the Nasdaq. I don't do anything with crypto, but just want to make sure you're paying attention. All right, so we had. I got one little artifact left. Let me get that off of there. I like to keep those previous day stuff off my chart. They're on my notepad, but they're not supposed to be on the chart. They're supposed to be on your chart if you need them. So we're just ranging between the August 13th, 2024 daily fair value gap high, shown here. If you watched the presentation on my YouTube yesterday, that was a recorded, on my son's YouTube channel, which I linked on my community post. I got a lot of questions, obviously asking, where's Caleb in it? Caleb's learning how to be able to talk with me about what it is I'm showing him. If I talk about everything I'm annotating on the chart, and I say, "Do you see that? Do you understand that?" and him just simply doing caveman grunts like "mm-hmm" or "yes, sir," that's not really that engaging. So I want to get through the content to get him up to speed, not as fast, but as reasonable in terms of time. So, like I said, he is not a rocket scientist when it comes to trading. He's got to learn the same thing you do in the language and whatnot. So I'm exposing him to seeing the over and over repeating phenomenon and how to also journal. So that's what his channel will be like for the first couple of weeks. But he'll be in there jawboning with me. But there's a lot of folks going to say, why is ICT just talking? It's supposed to be his son's channel. It is. And he's being trained by me. So you're getting the lectures as it would be if it was just him and I sitting next to each other. So anyway, we're ranging between August 13th daily fair value gap high and its consequent encroachment. Midpoint in here is the low of that. And we are now almost 2.5 minutes into the opening. We have a very large discount gap. So we'll look at that on the regular trading hours. See that here? So the rather large opening range gap. Okay. And we go back down to electronic trading hours now. And the daily chart. That is the fair value gap here. I showed this on the markup yesterday on Caleb's channel. If you don't know what his channel is, there's a couple people out there trying to pretend to be him. Obviously, I think he's got like 24,000 followers now on his channel. And there's only 2 videos, and I'm the one talking on them. But I always will link his most recent video on my community post on my YouTube channel. So the fair value gap here on the 13th of August, that's what's being highlighted with this candlestick's low as its high, this candlestick's high as its low, and the midpoint right there for that fair value gap. This is a buy side inbound, sell side inefficiency, and then back down into a 15-minute time frame. I have Tuesday's September 3rd daily low noted. So we're working around that as well. For your notes, Caleb, you need to be making sure that you are aware that after very large ranges, whether it be up days or down days, whenever there is a large range day previous to the new day starting, like right now we're looking at a new day trading the AM session, it's better for you to sit on your hands and not do anything initially until you get more experience. Obviously, you can trade them after you understand a little bit better what it is that you're trying to do. But initially, I tell my students not to try to trade the morning session after a large range day because it could be fickle. Fickle is where the market is basically doing things like this, back and forth, back and forth. And it's not all that engaging. It can be, but it's typically not the case. And while you're learning, you don't want to discover that you don't have as much experience as you thought you did trying to trade on after a large range day. It's better to trade in the afternoon session. And you're probably thinking, well, why didn't you live stream in the afternoon session? Because I have a life. All right, so we are looking at a 15-minute time frame. We have a little bit of an inefficiency right up in here, and it goes to the opening range midpoint, or that consequent encroachment, to that level right there, okay, that line. So we can drop into a 5 real quick. I would have liked to see that get cleaned up a little bit before it did this, but that's okay. Again, mid gap is here. First presentation is here. So that's your first fair value gap. Right there. And I'm only going to hang out with you guys until around 10:30 today, okay? So not too much candy. I'm going to take that midline off. It's a little distracting for me. You can always keep it on yours. And we have the end dog for today up at 18,993 and 3/4, 18,989 and 3/4 respectively here. So I'd like to see it trade to mid gap and then maybe explore a return back into here. If it leaves the upper portion above end dog open between here and starts to roll over, and we take out the low formed in the opening range, we might get down into the August 13th fair value gap low, that level down here. So I'm just keeping it relaxed this morning, not trying to be too hard pressed on what I want to see. In other words, I'm not trying to push a button in front of you and try to push a narrative right now. I'm just exploring both sides of it today. We've taken buy side here initially, traded down into the low of the fair value gap here. You can see there's a volume imbalance there, but that naturally gets worked out because of the candlestick's high right there. Poppy ICT. All right, so because we've taken buy side here, we have a little bit of sell sides layered up in here, nice and concise right there. So we could see it wick down below that. Maybe attack the consequent encroachment again on that August 13th daily fair value gap. Back inside of the first presentation of the fair value gap. Opening range defined by 9:30 here to 10 o'clock. Okay, anything other than that is just someone telling you a gimmick. That's This is what the algorithm refers to. You'll see it if you study it. You'll see it's always implementing the information you're getting in that first 30 minutes. Sometimes the trade sets up. Sometimes the trade is after this. But you're affording yourself the opportunity to at least study and seek that first fair value gap. On trending days, you only get one chance with these, and it just keeps on ripping, going one way or the other. Any day that's not a non-trending day, you'll get several instances where it wants to come back to it, offer a trade or a target. Okay, now here, see what it's done here? The body is outside that fair value gap right there. And that is classic. This is the reason why I tell you sit still, Caleb. Don't do anything or hold yourself to a high expectation on morning sessions after a large range day. In other words, we had a really big candlestick on the daily chart yesterday. So the morning sessions can have a little bit of distortion where the setups may not be as crisp. They may not be as clean. They may not be as obvious to you because your experience level is not sufficient enough. And that's the reason why I teach this way. It's not that you can't find setups, not that I can't find a setup. It just means that, while you're learning, it's important to try to, give yourself flexibility and don't demand so much on a day after a large range day. It could create another continuation of a large range day the next day, but in my experience, it's a little bit cleaner in the afternoon because it's like, oh, well, we've done enough damage for people to want to participate. In other words, everybody's seen it was a down day yesterday. So the logical perspective for the people that are always coming to the market late is they'll want to go short right at the open. And if they do that, it generally is like engineering liquidity to be ran on for buy side. Not always, but generally that's kind of like the MO. My point in saying that is usually the bodies will stay inside the fair value gap, which is what I'd like to see. Because it's the day after a large range day, it can be a little bit fuzzy, color outside the lines a little bit more, and it could cause confusion. It could cause doubt. It can make you second guess, or it may cause you to have no real convictions to buy or sell. So it's better for you in the beginning, Caleb, to just sit still and just observe. Now we're back to Tuesday's daily low again in here. Again, mid gap is here. 70% of the time, between 9:30 and 10 o'clock, that level is usually traded to. You want to screenshot that? Okay, so you want to see how, in your notes, you want to log this event where it traded back to mid gap. So there's the 70% strike rate of the mid gap getting traded to. First presentation, fair value gap. And the key takeaway is note how distorted this one is. Okay, this is classic after a large range day. Now, if it wasn't a large range day yesterday, again, now we're looking for end dog up here. If it weren't a large range day yesterday, this tends to be more uniform, and it stays in respect. Now, the wicks can come outside of that fair value gap, but the bodies tend to be more respective to the range defining the low and the high. In this case, if we're looking for a gap to come back up and to touch the midpoint, which is always the case, we're going into that if there's a large range gap. That gap's lower, like we have here, where we opened up lower than where we settled yesterday at settlement. We have a discount gap. That means it's more likely to trade up, seeking some measure of buy side. And then if you have the fair value gap here form, after a large range day, it can act a little muddy like this. Okay. And this is not something that indicates that they're changing the algorithm. It doesn't mean that they're out there doing traps on SMC. That is silly. That's people talking about things they don't understand because they're trying to get you to buy their course. Okay, does it look like I'm getting trapped? Looks like I'm smashing everything, doesn't it? Looks like precision brain surgery in here, right? So there's no traps in SMC. There's no none of that stuff. I'm proving it every single day. My students are growing in their understanding, and I love the fact that the comment section is like really positive, which is an encouragement to me because usually when I'm talking to Caleb, it's like, and he struggles with some of the things because it's very boring. It's very boring and dry, and he's never been like a strong academic child. And I can say that about my son because I love him and it's the truth. So he's not looking at this stuff and saying this is really easy, Dad, but he can see fair value gaps. So that's the reason why I elected to use this because I've talked about other things in the past, and it's just like deer in headlights. So I'm focusing on the fair value gap, not because the fair value gap is the best PD array I have, because it isn't. The best ones you'll never learn, but the fair value gap is the one that's obvious. It's obvious. You can see it. They can't hide it, obviously. And then when you add elements to it, like the first 30 minutes, which is the real opening range, the algorithm will see that first inefficiency right here. And while it does color outside the lines a little bit, for the students that have been with me longer than just today or yesterday or just in the 2024 mentorship, um, invariably you'll hear people say, "Oh, he's form fitting. He's making it fit for this individual circumstance." But they have always heard me, and you can hear it in the core content in the 2016, 2017 mentorship, where I talk about trading after large range days. You want to sit still in the morning session. The high probability setups will be in the afternoon. And if you are more inclined, because of your experience level affords you to do it, you can trade the morning session, obviously, but you have to be more versed on what it is that's going to most likely happen for you that takes you into tilt. In other words, where you're going to go and start going back and forth, buying and selling, buying and selling. And that's usually what I have seen with students that try to trade, even with my concepts. If they're too premature with their understanding and they try to just get out there and try to trade because they want to do something, I'd like to see it make an attempt to get through here and get up the end dog. They end up hurting themselves, not financially because some of them have because they trade with real money before they know what they're doing, and they over leverage and they over trade. So they try to do too much. So by having rules like this and having protocols, it helps, at least in my opinion. It's the best thing I can do as an educator is to remind you that there are risks. And if you don't follow and appreciate those risks, just because my concepts look really, really good in my hands and my other students that are proving that they're being profitable with them, doesn't mean that out the gate you're going to be able to do that without any adversities. So it's why it's important for the first 6 months to a year, you have to have very, very low expectations on yourself. And that way, every time you get a milestone in your development, it needs to be cheerleaded. It needs to be celebrated. Not online with social media, but in your journal, and someone you can confide in. Okay, it's better. It's better that it's not your spouse or your significant other because money usually is a problem for relationships, and they're not going to see it the same way you are. And these small little micro advances in your understanding, they're huge. They're huge in the beginning, and you really want to encapsulate that in your journal. But someone that may be a fellow student, maybe online, if you are in different circles where they're using the content, whatever, it's encouragement to see like-minded individuals, bounce ideas off of one another, but not for the sake of competition, because that's the worst thing you can do, is have a competitive mindset while you're learning. So what I'm watching here is this buy side imbalance, sell side inefficiency. And I'm looking at where we are in relationship to the middle of that. I got all my extensions on here. Get them off. Here's the opportunity for you to screenshot my secret Fibonacci settings. Don't tell anybody these settings. If you tell them these settings, they're going to change the algo, and then I'm out of business. Can't have that. Okay. So here is consequent encroachment. It's the middle of the range defined by this candle's low and that candlestick's high. Okay, so if it's bullish, if it wants to get up to the end dog, it's better if it doesn't come back and touch the midpoint down here. How many cuss words have I said today? Told you. I told you it's just a caricature. Get people talking. Master of Marketing. OICT. What are we going to do with you? Love me. I know you do. All right, so again, post large range days. That means you're defining that on the basis of a daily chart. Obviously, your daily chart for NQ is most likely going to show a very large down close candle for yesterday, as it should. Because it was a large range day, two things we have to understand. It closed on a low, so it's bearish. And then the public is going to want to go in the very next day. You want to screenshot that, by the way. Caleb, when you're watching the charts like this, you're going to hold down function and tap the shift key for your laptop, and that way you'll be able to capture it. TradingView has a little function in the upper right hand corner. It has like a little camera. I don't really like that one because it kind of like squishes the chart down. And I like to have my charts, as you can see when I'm doing the markups, I like to have as much of the real estate on the chart that's afforded to me, because I want to have the candles large and broad enough where you can really appreciate the bodies and pick out where the opens and closes are. Like that's a real nice perspective like that. Okay, so when you're in the process of trading, or like most of you right now are trying to learn how to do this, you don't want to be in here trying to do things like I got to be in here pushing the button or demo trading because I have to see some kind of results. When you journal and you're taking pictures and screenshots of things that are repeating, especially from things like when I'm doing in the live streams like this, it gives you context. Okay, imagine if you didn't have the understanding of my new day opening gap. Imagine if you didn't have the understanding of the opening range, which is the 30 minutes after opening bell to 10 o'clock. Imagine if you didn't have the rule that I gave you that 70% of the time the algorithm will reprice to half the gap between 9:30 and 10 o'clock. And imagine that you didn't get taught, not just this lecture, but all throughout the discussion about how retail, street money versus a smart money's perspective. When there's an arm wrestling match between those two categories of traders or mindsets, street money is going to fall victim every single time. Every single time they're going to fall victim to it. And it's because they're chasing impulsive natures and tendencies, meaning that yesterday they saw a big down day. And while I cannot trade with my students, expecting me to walk the walk as I talk it, when I do the lectures that say after a holiday you want to sit still in the morning session. Well, ICT, it sounds like you never take a trade. Well, clearly you can see I can execute. Just look at the examples I'm showing you. That's not to to say that you can't trade in the morning session after a holiday. I'm taking a great deal of caution because I respect the role that you're holding me to as an educator, as a teacher, as a mentor. A teacher or a mentor that's worth his weight or her weight in salt. I'm trying to give you all the advantages and remove all of the problem things that I endured painfully. So I lost fortunes learning how to do this. Before I got good, I lost fortunes, more money than probably most of you will ever make in your lifetime. You would have quit. Nobody would have went through what I was willing to go through. But because I teach this way, it affords you the luxuries of comfort and safety from the sidelines, and you can watch, observe. Do these rules work in a manner that would have protected me if I wouldn't have listened to them? Sometimes there's been instances where I'll say, Remember, it's a holiday, so we're going to sit still on the following day. Don't trade, don't trade the morning session. Obviously, the continuation of that thought process is you can always trade the afternoon session. And you saw me do that yesterday. And I teach and I have taught the time aspects of the PM session. It begins at 1:30 p.m. Eastern time. That means you can start looking for a setup then. And then you have the understanding of the 2 o'clock macro, which is 150 to 210. Then you can see how the market wants to continue with its carnival-like atmosphere of going lower yesterday. And while I don't have the the opportunity to say, look at me, I'm short from the open yesterday. Could I have done it inside the daily imbalance where it went back and hit constant encouragement? That's where my entry would have been. And if you don't know what I'm talking about, watch the video. I'll put it on my son's YouTube channel. That would have been my entry for the morning session. And then holding on to it. Now I probably would have had probably 2 or 3 contracts rolling into the 130 time period. And then I had to weigh out whether I wanted to do anything else in addition to that. That's how I would have handled it. Now, when I talk like that, folks that don't know me, they don't know what I'm teaching. They don't see the ability that I can show my executions, the logic that I call for specific levels. And when the date and the time and the setup is there, then I'll engage it. And then you get to see, precision elements again, like yesterday's trade. But if you're not versed or used to seeing the things that I do very consistently, very precise, it just seems like, well, he just said he would have done something, but you didn't do it, bro. And I know there's new students, there's new people coming in here all the time, and you're really selling yourself short if you hold that mindset. And some of my best students were ones that actually doubted me, the ones that had real stiff criticisms of me, and because they were much more convicted in their stance against what it is I teach. There is no algorithm. It's it's buying and selling pressure. There's no proof of execution. There's no this. There's no that. And then finally, when they went through the process of just saying, I'm going to go in and I'm going to see if it can be proven wrong. I'm going to prove him wrong. That's the trap. That's the smart money concept trap. Is I'm causing people to doubt enough to come into it and try to debunk it. And when they go through the process correctly, they become converted and they can't see the market any other way. And they have a better perspective on reading price action, which is my intended purpose here. Like, I'm not trying to be smarter than everybody else. I'm not trying to be the most popular one. I'm just trying to teach you the stuff that works. Because I know if you do it the right way, it stands a better chance that you'll find success doing it. But here we've had a couple things happen. We have had the market open at 9:30. We had a small little drop down and then rallied up, created the first fair value gap here shaded in white. Mid gap, we saw it trade to this level right here. And 70% of the time, you're going to see that is when we're opening lower like we did here from yesterday's settlement price. Let me go one more time back to regular trading hours. So here's previous settlement price here. It's the close. And this is the opening price down here. Since this is a small little up close candle here, it's the open. That's the first traded price at 9:30. And where we settled or where we stopped trading when you're using regular trading hours on your chart down here. I'm not an affiliate with TradingView. I'm not trying to get you to buy or purchase anything from them. But I don't know what plan that TradingView offers that allows you to, like I said, I buy the biggest program. I don't get it for free. I pay for it. I paid several years worth of it. So I don't have any kind of direct connection with them. This is the platform that my community said I should use when we left MT4 and MT5. I never wanted to use it. But regular trading hours is toggled here. And for you to get the opening range gap, you're going to go back to the closing price on the previous day. And we opened down here. So this is a discount opening range gap. That means we opened lower than the previous settlement price. If we were to gap open higher than that price, that means we are at a premium opening range gap. And you want to know the midpoint, which is this here. that middle line. That defines where 70% of the time the market will trade back up into it. Now, yesterday, if you can give me a moment, I'll see if I can take us back to that. That's the volume imbalance on the daily chart. And here's the opening range yesterday. Same premise, previous day's settlement. We opened down here, and that little tiny wick right there was all that it mustered to get into the opening range gap. So it never even went back to halfway. It didn't even go up to 1/4 of the opening range and just fell out of bed. So that is the difference between it doing what 70% of the time it's more likely to do. And because it's a gap opening lower, that means you have a 70% chance of seeing it trade back into the middle of the gap, meaning it's going to go up initially. We're not trying to predict as a student, Caleb, you're not trying to determine a full gap closure. But if there's a new day opening gap or a new week opening gap inside of the opening range gap that's above the midpoint of the gap we're indicating here, that means we're opening lower than where we settled. That means the gap high is here and the midpoint is here. So you have a very strong 70% of the time. If you start tracking this and doing it every single day, journaling it like this, you're going to see where I get the 70% figure from. I'm going back to 1987. 1987, using pre-electronic trading, using Globex numbers. Okay, so look at that move right there. After hitting end dog, isn't that beautiful? So we have news that came out 10 o'clock. That's what we're seeing their knee-jerk reaction to. And back down into that. I'm going to take the opening range parameters off here. Don't need them anymore. And back into regular trading hours, and we should be upsetting that sell side as we were looking at earlier. All that right there, targeted after hitting new day opening gap. So again, you want to take a screenshot of that and label that with the sell side. Okay, and now what we want to see is, does it want to come back up, work the lower end of that blue shaded area? That blue shaded area is your opening range gap. And then we have the August 13th daily fair value gap low. Isn't that neat? Price going up to some random level, some invisible fortress that says, or not fortress, but barrier says you're not going to pass. You can't go any higher, bro. Got to go down. Goes right to quickly now all of the sell side. So anyone that's been long, went long in here or went long here and didn't take anything off at the new day opening gap, look how fast they'll come for you. See that? And they use these high impact or medium impact news events on the economic calendar to provide them a smoke screen. So it looks like selling pressure in an absence of what? Buyers. And then the market drops down to some level that obviously has a big pool of interest for, we're back at Tuesday's daily low here. The opposing liquidity below these lows here after running up. Anyone that wants to sell short, right from the beginning of the day, they would obviously use these levels here for stops. They ran them initially. And then you had your first fair value gap formed. We colored outside the lines a little bit, but that's okay. That's part of what you're watching today, Caleb. Otherwise, I wouldn't have done anything in the morning session live with anyone. But you want to see these characteristics. You want to see this type of formation. Then rallied up into mid-gap. So the strike rate is 70% of the time, hitting it between 9:30 and 10 o'clock. still stands, and then up to end dog. So from here to here, that right there is a model. That will hit, it will stick, it will serve so well. And it doesn't need to be a new day opening gap. It could be a new week opening gap. It doesn't have to be both levels either. It could be just the low, and it's the first one you're going to trade to. That's a low hanging fruit perspective. That's what I want you to focus on, Caleb. Not the best of the best. I'm watching these relative equal highs here and full gap closure. We have a little inefficiency in here, and then we have Tuesday's daily low. So I'm watching to see if they want to drop it back down in there. Tickle this line again one more time. Work the halfway point of this buy side balance, sell side efficiency, and then drive for the individuals here. And maybe do a full gap closure. I don't believe that I have it set anymore for the live streams to do the thumbs up or thumbs down. Obviously, I get like a 98% plus like rating on the YouTube analytics page, but I can still see them. You probably can't see them now, but if you're learning today when you watch things like this, and it's comforting if it gives you confidence, if it encourages you, seeing the logic of these things panning out, giving some framework. If you're watching price without these types of reference points, I often make snide remarks about other forms and disciplines of trading because I want to encourage engagement for you to think critically about what it is you're trying to learn. Because if these types of things repeat, doesn't that at least give an advantage over you not using it? Because it gives you context. It gives you some kind of framework to view price through and around. Otherwise, I couldn't trust that the market's going to go up or down or stop here and turn around. Like all the questions that all of you have, you say, how did you trust taking that trade right there? Why didn't you think it was going to go higher? Or why didn't you think it was going to go lower? It's because I've spent 32 years doing this stuff, and I know what works, and I know the things that I did as a new startup in 1992. Like I was doing silly stuff. Like I was looking at trend lines and trying to get the right trend line, and I had hundreds of different of forms of trend line fans. I used GAN stuff, try to figure out and decipher the right trend line with that thing. And once in a while, I would get something in hindsight that looked like, wow, I figured it out. And then I'd go out and I'd lose money with it. It's demoralizing. And then when you see things through a lens of liquidity, inefficiency, and a manipulation somewhere sprinkled inside all that stuff, it allows you to see things a little bit differently. And that different perspective is a minority perspective that absolutely kills it in this industry. You want to be a minority. You want to be the cheetah, the lion that's sitting on the outside or outskirts of that watering hole. Because every day, everybody's coming to get a drink at the opening bell at 9:30. Everyone's coming here. And then you're looking for the opportunity to eat because everybody else is thirsty. You're hungry. You're trying to get your pound of flesh. And if you don't have some measure of defining what it is that says, I have a high chance of getting something to eat today and not getting hurt. You ever watch those nature shows? Those lions and those cheetahs. It isn't easy for them just to go out there and chase something down and eat. Sometimes the things that they're chasing have horns, and they can be hurt. And if they get hurt, that impedes their ability to eat tomorrow or that day. So you have to weigh the understandings of what you're trying to do, when you're trying to do it, and then get the lay of the land. Is it safe for me to go out there and engage? Because even though everybody's coming to the watering hole, you don't want to be going out there trying to get hurt just for the sake of getting something to eat right now. So hunting and stalking setups, there are criteria that my concepts will provide that define very, very high probability conditions. There are other times where the setup can be there, but because of the type of day it is, like today, it's after a large range day. That means the characteristic is in the morning session. It can be a little bit wonky. It can be a little not as clean or crisp in its delivery. And again, I'm using the fair value gap and how the bodies were just outside of that right there. Anyone else might look at that and say, well, see, this is them trapping traders, the smart money concepts. This is a trap. No, it's not. Like I'm talking to you live over top the chart and explain to you that that is a normal characteristic of a post holiday or post large range day. That's what it looks like. And I had students that were paying me, and when I would talk about things like that and not put them in trades, they were like, "Oh, this is dumb," and they would quit. And I'm thankful that they quit because I don't want people like that in my learning. I want them to move on to do something else. Stay in dumb money. Stay in street money perspective. That's why I'm telling you, for the folks that are worried about this stuff, oh, it's falling out of favor. It's not going to work anymore, or they're targeting this. They're not targeting anything. Like what you're saying is when you say stuff like that, you don't understand how the market's book price really, and you don't understand the entities that I'm trying to explain to you exist, and they're not on people's YouTube channel talking about how they were, you know, at the institution. At the institution, we teach, you know, real trading, quantitative analysis, qualitative analysis. And they'll say that intraday volatility or trading is a scam. And anybody tells you they can do it consistently, run away from them because they're a con artist, they're a scammer. Here I am. Here I am explaining it, okay? And Goldman boys are taking notes. Trust me when I tell you, that's the reality, okay? But they'll say what they have to say because that investment firm, it garners a lot of attention, and people that have a lot of money, they will use that style of investing. And I'm not an investor. I don't teach people to invest other than investing in themselves. But trading and timing the market, we have these relative equal highs here and the top of that new day opening gap. That's the liquidity. You take a screenshot of that right there, off of the first presentation of the fair value gap. So tell me about it, Goldman Sachs. Tell me about it. Tell me how that's not technical science. Because you're right, technical analysis is a joke. Technical analysis is garbage, because that is what retail uses. Triangles, pennants, moving average crossovers, VWAP, all that stuff. That's all retail. But when you look at things with the reality of why the market's book price, I mean, seriously, folks, seriously, okay? I'm not on my soapbox. I'm not up here grandstanding. I'm not beating my chest. I want you to think about what you're seeing and how pure it is. How pure it is. It's not something that's muddied up with indicators and garbage. So we want to see, does it use the new day opening gap here, sweeping around both sides of it, and then reach for a full gap closure. That would be the last thing for the morning session for me before we close the session out. And if it does that, then I'll just say, take a screenshot of that, and we'll end this one today and be done with it. But the delivery of seeing what the market would target, what levels are key. Now contrast that with anyone that uses anything. Just fill in the blank, right? Just fill in the blank with anything else other than what I'm teaching. And that's why it's like I'm the type of person in this industry that is going to be hated more than they're loved. The people that don't know what they're doing and have tried other stuff, when they come to me and they really do the due diligence to try to learn how to do it, or they observe, they simply just watch and listen to me. And I tell you what the market's going to do. And it behaves that way. And it's not ambiguous. It's very specific things. And it's based on time delivery first. So the algorithm that may not be believed by everyone that exists, it doesn't matter. I'm not frustrated at nighttime. And it sounds to you as a new viewer like I'm defending myself. I'm not defending myself. I'm reminding the folks that hold to the idea that there is no algorithm, that these markets are not rigged, that they lean on logic that is retail oriented. And that classification and that category of trader is the losing class. So if you're going to defend or argue against what is I'm presenting here, you're stuck, because now you're forced to pick what retail logic. What other retail logic is giving you these types of things right here with the sound logic, that is not ambiguous. It's very specific. Where's the liquidity? Where's the specific PD array, like the midpoint of the gap? The liquidity here, the new day opening gap, the first fair value gap, the sell side, I told you, below these lows over here. Like it's done all of that under the context that we opened lower after a large range down. So that means they're going to punish who? What classification of trader in street money, dumb money? What are street money traders trying to do? Because they saw yesterday's trading. What trading approach or sentiment will traders have going into the marketplace that simply don't know what I'm teaching and showing you? They're going to want to do what they saw yesterday was profitable. That means they want to be short. So they're going to draw into anyone that's already short here and then drop down, load the boat. Smart money is buying in here, rallying up to a random new day opening gap in the upper quadrant of the opening range gap. I'm just going to eyeball it here with my, I was supposed to pick up my glasses yesterday and I didn't do it. And I'm really flirting with stuff that I shouldn't be doing because my eyes are really not sharp right now without these new prescriptions I have. But that's another reason why I told you I have to leave here at 10:30 because I want to grab something to eat with my wife and then go get my glasses. But this guy talks too much. Nobody cares about your glasses, bro. Trust me when I tell you, nobody cares. Okay. So here's the upper quadrant. And then it goes past the upper quadrant just to fulfill the numbers at the relative equal highs and the new day opening gap. So it went just a little bit above it. So I wouldn't rule out another muddy attempt to get up to a full gap closure, maybe a little bit higher today. But this is enough for this morning. This is just a beautiful display of what it is I teach. You know, it's hard to fight against it when you just come to me with an open mind. You're not trying to be a worshiper of me. I don't let anybody do that with me. I don't want anybody calling me a goat, the king, the boss, you know, whatever. I'm just the average Joe. That's my middle name, Joe. Okay. And God's blessed me with an ability to be able to see these things. And I've done my best to communicate a language that affords you, if you spend the time looking at it, you'll see what this algorithm is doing at specific and select times. And all you need is just one of them. Just one of them. You buying the fair value gap here, getting to the halfway point of the gap, that might be your model. And you don't care what it does after that. You know what? That's maturity. And that's early onset maturity. Most students in this industry cannot have that mindset because they want to have the full swing. They want a full pull where the whole move, you capture the whole move. That's unrealistic. It's really unrealistic in the beginning. But you think that that's progress for you to be able to get to that real quick. And I'm telling you, for someone that's been doing it for a very long time, and I made every error that you're ever going to make and probably done them dozens of times, thinking I was going to be the exception to the rule. That's not what's going to happen for you. Okay. I would love for you to be able to say, Michael, it didn't happen like that. I was the exception. Here's the proof of it. And, well, that would be wonderful. But it would be disingenuous of me and it would be counterproductive for me to tell you or blow smoke up your ear to try to entice you in believing that you are going to be, or any of my students are going to be, that exception. So if it gives you the proper mindset to avoid having that error, I've done my job as a mentor. I'm providing you an initial mindset that is reasonable, it's realistic, and it's allowing you to graduate in a measured progress that you can track with your journal. You're not tracking your understanding. I had a guy send me a message the other day and says, how do I know I'm progressing? Because I don't feel like I'm progressing. And then they say, I'm losing money in my funded account challenges, or I'm losing my funded account. If I get it, I end up losing it. How can I track my progress? Number one, you don't track your progress by going out there and trying to use what I'm teaching ongoing right now in a setting where you can potentially lose. That's not how you measure your progress. That's how you ensure that you will not progress efficiently and properly, because now you've weighted the outcome to a positive or negative, and it has a negative impact larger than the positive. The positive, if you making money with it right away, you haven't really learned how to do it. The positive is it feels good. And then when you show everybody on social media, that's it. It's it. That chewing gum's lost its flavor. You might as well just spit it out, because no one's gonna care. No one cares about my trade that I took yesterday. No more. They're interested in what I'm doing today. What's he gonna do today? What's the magic trick he's gonna show today? And that's how it's going to be for you. But the negative impact of you going out there and trying to rush to use what I'm teaching before you really understand yourself and how to use this information correctly, that impact is going to far outweigh any positive you get by using it. And if it makes you a little bit of money, because think about it, you're not going to make $1 million. You're not going to do that, in your first year of trading with this information. You're not going to do it. But some of you think that you're going to be that person. And I'm telling you, if you try to do those types of things, the only thing that's going to do is push your success further away from where you are right now. You're literally throwing it so much further down the road. And then when you get closer to it, if you don't change that mindset, you're going to kick that can further down the road because you're doing things backwards. And it doesn't feel that way. But I'm telling you, I've taught so many people since the 90s. Okay, I've taught a lot of people. And it's always the same thing, that people that try to rush out there and try to use it to make money right away without learning properly, logging, journaling, observing how they feel, if they felt ecstatic, if they were euphoric when the price was delivering like they thought, you have to keep that in check. It's good that you're journaling and you're saying, I'm happy that this panned out like I thought it would. And it was so encouraging to see it. You don't want to say, I'm the man, I'm the GOAT. ICT, watch out, baby, I'm coming for you. All that kind of stuff that you would put in your social media posts or whatever. You don't want to do that in your journal, because what that does is it elevates and it stimulates your ego. And your ego, for the men, is going to be hugely impactful. If you are focusing there, chances are you're minimizing or putting blinders on the things that you're not doing correct, and you're failing to see those opportunities to improve on. So when I sit with you live like this, Caleb, and I'm pointing to certain things like this, I'm allowing you to key up on the setups that make sense to you. And I'm going to review them real quick, and then we're going to close it because it's 9 more minutes and I'm done. So initially, we were looking for the lower gap opening lower, which you can see that happening when we were at 915. Chances are, with over 100 handlers or so below previous day settlement, chances are we're going to open up lower. And that there's a 70% chance that we're going to go back to mid gap. But yesterday was proof that it's not 100% right. 70% is not 100%. But there's nothing in that chart yesterday that would have brought into the mix as a buy. It just kept eroding lower. Okay. Well, you wouldn't have got anything long on it anyway. So you wouldn't have lost money. You just missed an opportunity. And I was just going through all my students that use my concepts and that do live stream. They all had generally the same thing. It was just like, wow, this thing just keeps melting. And all the other YouTubers were like, wow, man, this is just going lower. And you can see that because they're live streaming, okay, and if this is one of my students listening to me, listen, okay, I'm not trying to be critical. I want you to observe this because this will make you better. You're almost apologizing to your audience because you don't have something to get into a trade because it's moved so much. That is the problem with live streaming, because you feel like you have to perform. I don't have to perform. I want to take a setup if it's there and it makes money. If it doesn't make money, I'm not taking it. If I know I'm going to put that trade on and I'm going to have anxiety about whether or not it's going to be in high probability conditions, if it doesn't fit the criteria for high probability, if I can only frame it in one way, and that's the way I'm in it and I'm on side, I'm not going to have any anxiety about it. I'm not going to second guess it. I'm going to sit here and wait for my partials and wait for my terminus to be hit. Or any position that's open that I have a trail stop to, I accept the fact that I'm getting stopped out there in profit. You see what that mind shift has done? It completely removes the outside influence of other people telling me when and how I should trade. And that's what my students are wrestling with when there's days where it just starts moving right away and they don't have an opportunity to get in because they haven't learned everything like I was covering yesterday in Caleb's channel. There's things that you could have used to get in. Looking at it in hindsight, you can see it clearly now. But most of you were so shell-shocked that you couldn't do anything yesterday morning. You completely threw out the baby with the bathwater and didn't even worry about the afternoon session. And then here I am, I'm rolling up in there at 1:30 like I teach. Going there, okay, now I'm going to look for what I'm looking for. Where everybody else is like, that's it. That's just like the guy that, he cruises through the casino. He's only sitting down in front of those slot machines until he sees somebody that's been there for a long time and they ain't had a payout. And I'm waiting for that person to get up off the chair. I'm going to slide on in with my $25 and plink, plink, plink. And then I get the jackpot because the ratios, it's time for it to pay out. So everybody that couldn't do anything yesterday morning because it just kept going lower and lower and lower, thinking, oh man, it's not giving a setup. Oh, they're changing the algorithm. No, they're not. That's typical. Now, it's an extremely large example of that where it's a big range day down, but that's typical of a post-holiday day where you don't know what they're going to do. And because everybody couldn't trade the day before, and it's usually a day where trading would have taken place on a Monday. So what's happened? People are chomping at the bit. They're literally biting their fingernails, looking, I can't wait to start trading. I can't wait till it's time. You're anxious. And boom, the market comes out and just slowly erodes lower and lower and lower and lower and lower. And all your technical stuff isn't talking to you because it's being manipulated. They just keep dropping the price, keep dropping the price. It doesn't matter how many people come in and want to buy it. It's not going to go up because it's designed to go down. And it's staying in that sell model. Just keeps digging in and keeps digging in, digging in, digging in. Okay, I'm going to wait. I'm going to wait until the afternoon at 1:30, and I'm going to see my setup for them. I told you, I know my setups are coming. My setup will be there this afternoon. My setup will be there in the last hour of trading today. It'll be there on Friday. It'll be there next week, every single day. I know my setups are going to be there. But contrast that with everything else out there. You're going to have to wait for your indicator to flash some kind of confirmation thing that it's okay to buy now or okay to sell. Oh, the VWAP, the VWAP is going to act like moving average resistance. See how the price doesn't get above that? That's nonsense. It's literally nonsense. You might as well just put any old moving average on there and call it the same thing. But that's not what's making the market go up and down. It's not. That's absolutely not what's happening. So look at what we have here in price action. We saw the fair value gap here to mid gap. That's one setup. That could be your model. You could go fair value gap, partial mid gap, terminus, new day open gap low. Others that are contrarian can see this and say, okay, well, I like this setup here, and I want to see a opportunity where I can go short, and I can short an inversion fair value gap. That's this one in here. Extend that over here. You can see the body respecting it. Go short, and then target that sell side I outlined. I promise you, I have students that did that trade. I know I have students that took this one here to the 70%, and I don't know what they did up here, but I'm certain that they probably saw the end dog because it was in my chart live streaming. They're peeking at my chart while they're live streaming, but they're trying to keep focused because they don't want me to influence or entice them away from what they're looking for, and that's exactly how they should behave. And then this one here, where we take the fair value gap, that's first presentation of it between 931. It right here, went through it. Oh, see that fair value gap ICT talks about? That's what everybody on Twitter that doesn't know what they're talking about. They were leaving posts of that and trying to troll me. And I'm laughing at them, literally laughing at them, knowing that this is going to become a reclaimed fair value gap again. And then what will happen? I drew it out. It came down, hit it, rallied one more time for the relative equal highs, and laid a candlestick body over top of the new day opening gap. See that? Now what is it doing? The chop is real, right, Patrick? The chop is real. Every setup Every potential setup for you as a ICT trader this morning outlined. Everything here flies in the face of everything algorithmic. That's not algorithmic, that's retail, but it's algorithmically delivered here based on time and price. So my question to you in closing is, when you see these things described in real time, doesn't it feel like you're not supposed to know it? Doesn't it feel like that? Doesn't it feel like that somehow this is like a cheat code? Like this is really scary to see how precise these things can behave. Because isn't this supposed to be the largest financial casino in the world? I thought everything was buying and selling pressure and completely random, and nobody can know with intraday charts what price is going to do because nobody can time the market, right? Nobody can time the market. No one can time the market with intraday charts because intraday charts are noise. I'm telling you, I promise you, run away from them. If they tell you that they can time the market and they can do it consistently, run away from them because they're a con artist. And I mean that. And that's coming out of the mouth of a Goldman Sachs alumni. And you can still find that video on YouTube. And I have screenshot that and recorded it, and a lot of my students do it too. And we've turned it into a meme because everybody understands that that's coming from a perspective that they work in an environment that caters to longer term investment ideas. And that right there affords them a whole lot of low probability. They could be wrong a lot when it's higher time frame because they're not worrying about the micro fluctuations in here. Which one has the greater skill set? Clearly this. This is brain surgery compared to romper room playground. Dodgeball. That's the equivalent of higher time frame, long-term investment. You could literally throw a dart at the stock tables, and as long as you hold on to it long enough, you're going to have it where I need money. And that's the math behind what they tell you. Oh, the stock market averages 12% a year. 12% a year? I'm going to put my money tied up with people that don't even know. They're telling you that they don't know what they're talking about. These individuals are coming out there telling you unequivocally that they have no idea how to trade. But they use value and long-term trends and fundamentals that says it should go up. So if we buy it and hold on to it and just weather the storm, here's the upper portion of that opening range gap. Truth be told, that's what I'm hanging for that. Take a screenshot of that. Bam! Goldman boys! How about that? You can't time the market. You have no idea what you're talking about, ICT. You have no idea. Don't listen to this ICT guy. Whatever you do, don't listen to this guy. Avoid ICT at all costs. If you want to stay in the dumb money category, I promise you, if you follow that advice, you're going to get the results you're looking for. I promise you. You're looking to lose. You're looking to never make it. Because the folks out there that tell you that you can't time the market, that's them saying that they don't know how to do it. That's them saying we're not going to acknowledge the proof that this guy ICT's proven on a live stream in front of everybody with a 4-second latency. That means for whatever I say and point to, 4 seconds later, you're getting it. You're seeing it. And the folks that have live data, they already see it coming too. They can anticipate it. So now, my question to you is, look at this. Is the chop still real? No. But ICT's concepts are real precise, real good, tasty, delicious, isn't it? Isn't it so good? Oh, it's so good, isn't it? Now imagine you've walked through life 30 years. Well, it's not entirely true. About 27 and a half years, 28 years. That is what I've been carrying. And I've had all these different personas online. I've been so many personas online over the years. And listen to people come up and try to promote this and promote that. And I'm thinking to myself, this is ridiculous. This is ridiculous. And I am the one out here proving things that no one else can replicate in any other form of trading knowledge. Okay? Oh, yeah, he talks about this and talks about stop hunts. Oh, man. It's not just a stop hunt. It's the whole panoramic view and the timing aspects where a stop loss isn't going to get hit, where the market's going to behave a certain way, and then run for the liquidity. Everybody understands there's buy stops above old highs and below old lows, there's sell stops. Everybody understands that. I didn't fully understand it before I started trading with real money in 1992. Admittedly, I had no idea what I was doing. I should have never put money into an account. But once you understand, because I encourage folks, it's better for people to go out there and don't believe me right away. Go do other people's stuff. Because once you wreck yourself doing that and you come here, you're going to swear up and down that I should have been the only person in Jack Swiggert's book, Market Wizard. Okay. Because everything else literally is nonsense. Now, I'm not saying those people in those books aren't worthy of listening to, because I looked at Ed Sakota. I listened to uh, Linda Rashke. I think that they had a huge impact on me. Marcus in the first book, that was one of the persons that I was like, wow, I resonate with him first, and then Ed. And I'm like, wow, I can see how that, that really resonates with me. His whole business about the Jade Master, that was my first time hearing about that, and it resonated with me because I'm like a David Carradine, Kung Fu, the series, 1970s. I'm a 70s boy. I was born 1970 too. And I grew up watching David Carradine, and I was into this martial arts thing. And it just seemed like that Jade Master story that he used. It's like, that really resonates with me. I want to be that. I want to find a Jade Master. I want to find that. And you know what? I didn't find one. So I had to become him. So that's who I am now. I'm Jade Master. Okay. That's not Jade. So that's why I tell everybody that it's good for you to have failed doing other things, because you're going to really see what you didn't know when you come to me. As a new student, I think, if I'm being 100% honest, that's the purest way of doing it. But why don't I say that's the best way? Because you're going to hear stories. You're going to see things said about me from people that don't watch what I'm doing in front of you live. They haven't spent years with me doing this thing live in front of paid students that they would have came out and said, hey, this guy can't do this. Look, he did it all wrong today. Here's proof, 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 proof. Never happened. You're seeing what my private mentorship has saw for years. Beforehand, over live price action every single day. I have never seen anyone ever have the consistency and accuracy that my community has watched me do and perform for years. And I've done it where it's meant to encourage you and inspire you. But if you don't have a strong conviction to filter out all the outside noise, because social media has a really big impact on people, if you're not prepared to sit down and say, okay, I'm going to take what he's going to provide in information, and I'm going to give it my 100% effort, and I'm going to filter out any kind of negative. I'm not going to let anybody tell me what I think I should think about it. I'm going to see it for myself. Aren't you all adults? You should be adults. Do you feel like you're being tricked here? Does it look like there's some kind of illusion being perpetrated here? Or is it the logic that I'm trying to show that keeps repeating every single day? In the world's largest casino, billions of dollars change hands in this stuff. And here's this guy from Middle River, Maryland. Okay. Used to deliver pizzas, right? And I'm sitting here telling you what the fluctuations on this thing's doing on a 1-minute chart. What's the possibilities of that if it was just luck and continuously keep doing it, right? It's fun, isn't it? And that's what these individuals are going to tell you. But if you come here with a pure mind and you block out everything else, that is the best way to learn, because you're not muddied up with poor logic, because you end up getting these pet techniques. Like I had pet techniques that I picked up in the early years. I was like, I'm convinced that I just got to figure out how to do this one better. The stochastics divergence. I love the type 2 trend following divergence. I like that more than your standard lower low in price and a higher low in the indicator. That was like my favorite thing, to see a higher low when the market's bullish, but the stochastic I was using on an hourly chart would go lower than the reading it was at the lower low in price. So that's a type 2 trend following. And they call it hidden divergence. And that's, it later was picked up when it was first released by a guy that was producing charts back then, and Nick Van Nice is his name. So he's the one that gave it to the community. George Lane didn't invent it, and I love doing it. And I love twisting the night because there's so many people out there talking about how this one's the engineer of this one's the founder of this. You guys have no idea what you're talking about. Like, you literally don't even know history. Like, you don't know. You're just listening to other people talk on the internet. So, in closing, I'm closing it up now. You got an extra 9 minutes from me, no extra charge. The screen as it looks right now, if you took everything off of it and it was a blank chart, which is what I want you to do, I want you to take a screenshot of mine right here as it is in the live stream. And then on your own chart, I want you to strip everything away, just price alone. And for my students that have been with me for a long time, try to remember what it was like when you looked at those candlesticks like that and it was completely foreign to you. It was like learning a foreign language you've never seen before. And now everything has a rhyme and a reason. Everything here has a purpose. And when you understand that and you fully appreciate it, it's like rocket fuel. It fuels you. It keeps you going. Here's that gap. Yesterday I was showing in the markup that was being used as a draw that took us down below the 19,100.50. Let's see if we can get back up into that today. And then if we get above that in here, let's not do that. If I do anything, I'll show it to you in the afternoon. I've given you enough candy today, okay? Stop being so greedy. So that's the business for today. I think if you're here to learn, you've got some good stuff today. You got a chance to watch how my PD arrays perform, how price delivered back and forth, and how it sought liquidity, and then work towards that upper end of that opening range gap. So if you'd like to give me a thumbs up, I promise I'm the only one that can see it. I wish I could see the thumbs down because they do make me smile, but I'm at 98% plus in the likes versus the thumbs down. So you guys in the thumbs down category, you gotta get those numbers up. They're rookie numbers. And until I talk to you tomorrow, Lord willing, it might be a London session tomorrow. So we might be meeting tonight my time, which would be 2 a.m. to like 4 o'clock in the morning. Because I promised I'd give you a London session. So to tell you for certain, just check my community post today at 5 o'clock Eastern time. That'll either confirm that we will be meeting on live stream at 2 a.m. tonight, my local time, for Thursday's trading, or if it'll be Thursday nights for Friday's trading. It'll be one or the other. But if I'm not going to do London tonight, I'll be back tomorrow at opening bell around 9:30 or so. And until I talk to you then, Lord willing, be safe.